Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. Welcome to tax season 2026, and what a season it is shaping up to be. We have all kinds of new tax laws, new reporting forms, new account types, and plenty of new tax planning opportunities to consider as we get 2025 wrapped up and in the books, and then get 2026 tax planning off to an early start. In today's 2026 tax season channel launch video, we're going to cover what's on the agenda for Number Crunch Nerds between now and April the 15th, 2026. And then we're going to start our fundamental comparison of the Roth IRA conversion tax strategy to the buy, borrow, die, or BBD strategy. These are two distinct retirement tax strategies that are for different purposes and that can work hand in hand together. So starting right here, item number 1 is the Number Crunch Nerds 2025-2026 Tax Information Organizer download, which is available for all of my viewers starting today as of the release of this video. The Tax Information Organizer contains over 197 tax questions and guidance relevant to completing 2025 tax returns and getting ready for 2026 tax planning. Whether you are number 1, preparing your own returns, number 2, gathering your tax information to pass along to your CPA, or number 3, you just want to make sure that you haven't overlooked something for tax planning 2026, the Tax Planning Organizer will provide you with a voluminous checklist to help make sure that you have all your tax ducks in a row. You can find access to the 2025-2026 Tax Organizer in the link in the description below this video. Okay, item number 2 is the Number Crunch Nerds 2025 Tax Prep and 2026 Planning class, which will be running from February the 1st, 2026 through April 15th, 2026. This year's class will be a combination of 2025 tax preparation using TurboTax, plus modeling of retirement funding / drawdown strategies that we have never before covered on the channel. For the 2025 tax preparation portion of the class, we will be covering number 1, all of the basic tax prep topics, plus number 2, any topics that folks are interested in and that TurboTax is capable of handling, with a few minor exceptions which will be described in the class FAQs. The general format of the course will be, starting on February the 1st, we'll be doing generalized tax prep video topics which are widely applicable to most folks. And then as we get towards the middle of the course, we'll be transitioning into topic-specific Q&A videos based on member questions, and we will continue along that path until we get to the end of the class on tax day, April the 15th. Now for the tax planning portion of the class, which will consider retirement funding strategies in 2026 through life expectancy, we will be building out Excel models for strategies that include, but are not limited to, number 1, the buy, borrow, die strategy. Number 2, the 4% distribution rule. Number 3, the constant percentage of portfolio approach. Number 4, the guardrails approach. Number 5, the bucket or time segmented strategy. Number 6, tax sequenced distributions. And then number 7 and beyond, potentially other strategies. I am open to ideas from members of the class. And in addition to all of that, I want to incorporate analysis of annuity income into some or all of these other strategies. And of course, all strategies will be considered in conjunction with their associated tax effects. In other words, we will look at everything both on a pre-tax basis, but more importantly on an after-tax basis. Now, at the highest level, how are the strategies that we went through above different from one of the major topics that we have focused on thus far on the channel, and we're talking about Roth IRA conversions? For example, what is a fundamental conceptual difference between Roth IRA conversions on the one hand and the buy, borrow, die strategy on the other hand? Well, the Roth IRA conversion is a concept exclusively related to retirement account assets. The strategy converts assets from one type of retirement account into another type of retirement account. And there is no such concept as converting from a non-retirement account asset into a retirement account asset or vice versa. Now, on the other hand, the buy, borrow, die, or BBD strategy is a concept exclusively related to non-retirement account assets, because the BBD strategy contemplates a step up in basis upon death. In other words, for the strategy to be viable, the after-tax value of the step up has to be worth more than the after-tax cost of borrowing against the assets until death. And there is no such concept as step up in basis for retirement accounts that allows the assets to escape taxation permanently. The assets in your pre-tax retirement accounts will be taxed, either number one within your lifetime, number two within the lifetime of surviving spouse, or number three within 10 years after surviving spouse's death, all through RMDs. So that is an example of two completely different tax strategies for two completely different types of assets, and learning how to use these two strategies side by side in conjunction with one another will be one of the topics that we cover extensively in the tax season 2026 prep and planning class. By the way, there is a video FAQ about the class that is now available, and you can find an access link to watch that video in the description below this video on YouTube. Now, continuing our discussion of the other distribution/retirement funding strategies in the above list, including the borrow component of the BBD strategy, what do all of these strategies have in common, which is something not contemplated when looking at Roth IRA conversions in isolation? And the answer is cash flow analysis to fund retirement. In other words, these other strategies contemplate an annual cash flow goal of sorts, i.e. an amount that is needed to cover your annual living expenses and other financial needs, and ultimately your residual value that you will pass along to your beneficiaries. If we consider this situation in graphical format, over here we have the Roth IRA conversion scenario analysis. We have all of our pre-tax retirement accounts over here, and we have the dreaded tax line right here. And the Roth IRA conversion analysis contemplates that everything in here, meaning everything in your pre-tax retirement accounts, must cross the dreaded tax line at some point. And therefore, our goal here is to utilize strategic Roth IRA conversion to minimize the impact of crossing the tax line. Alternatively, over here in the die portion of the buy, borrow, die strategy, here we have all of our pre-tax non-retirement accounts and all other pre-tax assets. When I say all other pre-tax assets, that could include something like your primary residence, which has appreciated significantly since you bought it for $47 in 1923 and is now worth millions of dollars, and you have an unrealized capital gain sitting there. Right here, once again, we have the dreaded tax line, but the die portion of the BBD strategy contemplates that nothing in here technically ever has to cross the tax line. Therefore, and you'll only hear somebody ever say something like this in a tax class, therefore our goal over here is to die without ever subjecting these assets to a taxable event. And I think this little meme right down here summarizes the issue. Here lies Johnny Step Up. The IRS never got him. And that's because, just in case you're not quite following yet, all of these pre-tax non-retirement accounts and other pre-tax assets technically never have to cross the dreaded tax line if you are able to die without subjecting them to a taxable event. In other words, that would be a sale or liquidation. But remember, that only applies to non-retirement account assets, because for retirement account assets over here, we already know that they will have to cross the dreaded tax line at some point. But here's the thing though, nothing in what we've covered so far in the above two diagrams contemplates the money you will actually need to live and fund your retirement. Going back up here to the die portion of the BBD strategy, it's easy to say, well, just die and never subject any of your pre-tax non-retirement account assets to a taxable event. But perhaps you may not have a choice. You may not have enough cash flow to fund your retirement years if you don't subject them to liquidation or a sale. And then over here in the Roth conversion scenario analysis, we are simply moving money from one type of retirement account into another based on the knowledge that all the money in the pre-tax retirement accounts will have to cross this line at some point, and therefore we're trying to minimize the effects. But going back down here, neither of those two concepts considers the amount of money you will need on an annual basis to live and fund your retirement. So we need to find a balance or middle ground, and that will come in the form of a mixed approach, which we will look at in detail as part of the tax season 2026 prep and planning class. We will start our analysis by looking at our pre-tax retirement accounts, our pre-tax non-retirement accounts and other pre-tax assets, and we will run the numbers through some combination of distribution, spend down, annuity income, and borrowing, which is the borrow component of the BBD strategy, and we will model all of that through these various types of distribution and funding strategies, while also considering Roth IRA conversion analysis. So when we combine all of that with our other income that is generated during retirement, like Social Security, for example, and all of our after-tax assets, like the money that is already in Roth form, we can determine the most optimized way to fund our spending needs during retirement while minimizing the taxation of what must cross the tax line and maximizing the amount that we can get around the tax line, which will ultimately maximize the residual value that we pass to our beneficiaries. So that is a high-level overview of what we'll be working on in the planning component of the Number Crunch Nerds 2025 Tax Prep and 2026 Planning class. As I said before, there is now a video FAQ with more details about the class, and you can find a link to those FAQs in the description below this video on YouTube. Okay, and finally, item number 3 for the Personal Tax Planning Template Program. We made a lot of ease of use and clarifying updates right at the end of last year, and the 2026 Personal Tax Planning Template V1 is now available for download in the members area. We're going to kick off 2026 for the Personal Tax Planning Template Program with tie-outs to the 2025 1040 in TurboTax. There are a number of new forms and schedules related to the Form 1040 after the OBA law changes, so we will test our 2025 column against TurboTax to make sure that our base year Roth IRA conversion starting point agrees to our tax returns down to the dollar. So keep an eye out for Personal Tax Planning Template specific instructional videos that will be rolling out on the channel as we get into tax season 2026. So that concludes today's 2026 tax season launch video for Number Crunch Nerds. Thanks everybody for watching. Make sure to grab your copy of the 2025-2026 Tax Organizer at the link in the description below this video, and let's get ready for taxes 2026.